Hi, Lee. Good to see you all.
Hi,
Hello,
Karan.
And thanks for joining in this special secondary markets ATS session. You guys are such seasoned speakers, and you have a lot of insights into this market. It's really looking forward to hearing that. So, by way of introductions, I am Kiran Garamella, and I'm the chief scientist and CTO for KoreSummit. And I will let you, Lee and Pat, introduce yourselves.
Sure. Yeah. Hey, thanks, Karan. Lee Saba, I'm the head of market structure for Rialto Markets.
Hi, Pat Lavecchia. I'm the CEO of Oasis Pro Markets.
Awesome. Good to have you both. Good to have you both. So, there's a lot of buzz around the whole secondary markets, and that's been, one of the value propositions of getting into digital securities and so on. But the notion of secondary markets can mean a lot of things, right? So, and where are the real advantages? And people say liquidity, but then they'll say, well, where is the liquidity and so on? So, what are some of your insights and thoughts on that one? And I don't know, Pat, if you want to go first. And I mean, people talk about digital securities, the doing away with paper, right? I mean, who is working with paper nowadays, right? So, Pat.
Yeah, absolutely. I think that, it's a great question. We're at the forefront right now of this technological evolution with the blockchain and where it's moving for digital securities. The benefits are just obvious across the board, and obviously Core Connects and Rialto and Oasis Pro Markets are trying to address all that. But it allows for just simply faster settlement times, very low counterparty risk, potentially, less documentation, so less paperwork, a good control location, and if eventually we get to utilize the blockchain as a good control location, then an immutable control location. So the benefits are amazing. I remember when I started on the street, I'm a little older than I look, or a little younger than I look. It's one or the other. But I remember guys running around with bags, big pouches of leather bags with stock certificates in them. And these runners were all over Wall Street, especially downtown. And my background is large banks, Credit Suisse, and J.P. Morgan, Bear Stearns, and that was just normal. And now it's moved into the electronic age, and as Lee will probably share as well, there's still components of the capital market system that, in order to do a trade, not necessarily equities, but as you move into more esoteric products, where in order to do a transaction or see where the market bid is, you have to pick up the phone or send an email, which is just ridiculous. So the market is growing. We're at a nation stage right now, but it's going to be very exciting. And I think in 10 plus years, to the comment about is there paper, do you use paper? The answer is going to be no, and everything will be electronic, easily accessible, transparent.
Yeah, I agree with that, Pat. It's I love the comment because I'm a little bit younger than I look, or whatever. What did you say? A little bit older than I look. But yeah, I do remember those days, and you probably know where I'm going to go with this too, Karan. Is the aspect of fluidity versus liquidity, and it's a term we've been throwing around quite a bit because private markets and digital securities are a little bit different, right? We're not talking about trading Amazon or Apple or those types of stocks. So each entity's cap table may be a little bit different. But what we have broken through on is this fluidity concept, where we can go end to end now seamlessly, no paper, in a compliant, regulated way, working with transfer agents, working with the alternative trading systems that Pat and I both work for, and that's really going to make the world go round. I mean, we've spent a lot of time engaged with Karan and KCX, to provide that fluidity for each individual issuer's profile. So, we can accommodate all of that across the deck, which I think it is revolutionary. And I think we're getting there very quickly. And, who needs that paper? Let's lean on those blockchains.
It's fascinating because, people who invest in the private security markets, they typically come from a certain background. They don't necessarily, at least in the past, right? I mean, they're all the accredited investors, the richer, and they may get into private markets, and they know that they have to hold for a long time. There's no liquidity in things like that one. I mean, isn't the expectation with the retail investors more about, hey, I can trade my IBM stock or Microsoft stock in a heartbeat, right? A 2-second, 5-second confirmation. Is there an expectation from your experience with these types of, what we call the really democratized retail traders and investors today about that type of expectation that there's going to be a volume and a liquidity, how far away is that? Is that real? And what is real? Are there any thoughts around that expectation from you?
I mean, so I can start out with a statistic, right? I mean, you're looking at, in the United States alone, there's 23 million private companies, right? And all of them would be, eligible at some point probably for Reg A or Reg CF or D component. When you look at the public markets, the last I checked, there was under 6,000 listed companies between NASDAQ and New York. And even on NASDAQ and New York, there are companies that don't trade. So everybody has this opinion that, not everything's Apple, not everything's Microsoft and, the big names. So, in the private markets, it does shift a little bit. And I'd love to, hear Pat's theories on this too. But it's, or experiences. Every company is a little bit different. If you have 100 shareholders on your cap table, right, there may not be as much liquidity. If you have 100,000 shareholders on your cap table, now you have a different liquidity profile where, there's probably going to be more going on in and out of there. And there's multiple ways to accommodate this. You can have a real-time order book, or you can have, a point in time cross, right, where you aggregate some of that flow and let some of your shareholders know that, at this moment in time, if you want to exercise, if you want to buy more or sell your current position, you now have, an opportunity to do that between, 2 and 3 on the second Friday of March, So it's a slightly different story than I think what most folks are used to. But again, I think I just want to emphasize it's different per issuer.
Yeah, I completely agree with Lee. In regards to your example there on the liquidity front, these markets, prior to these markets, along the lines of what Rialto and Oasis Pro Markets have done, there is no liquidity, right, for the most part, away from some of the services like Zambato and some others who are primarily dealing with Silicon Valley unicorns, et cetera, for employees to be able to liquidate a portion of their holdings. But away from that, again, it's like baby steps. 5 years ago, I don't think anyone would have imagined that there would be an opportunity for Reg CF, Reg D, Reg A plus to move into this arena, utilizing the blockchain and speed. Yeah, and there are a variety of different ways to do it. We have an active order book, so it's real time all the time. We haven't launched yet. Granted, we'll be launching in Q1. But at the end of the day, I think, again, in 3 to 5 years, and it depends on your time frame. Is that short term? Is that long term? That it's a bit of a chicken and egg, right? So most of these private companies out there don't have many shareholders. One of the reasons they don't have a lot of shareholders is there's a lack of liquidity. So if they invest, they have to, determine they don't need access to that investment amount for a period of time. I'd say the average hold time is anywhere between 3 and 5 years, unless you're one of these VC firms and there's a frothy IPO market. So if there's an opportunity, and these are the discussions we're having with a number of potential issuers, is they're looking at the approach and utilizing the blockchain and potentially the benefits of DeFi at some point in the future as well. That part of their marketing is to add this liquidity feature, so that if someone is on the fence in regards to making an investment because of that lockup, they have an opportunity, if they so choose. It depends on volume. It depends, so that there will be volatility in the price. That it could have them take that step to make the investment. We're heading there, but as you can tell, this chicken and egg. Once this starts rolling, the number of shareholders grows. It gets to a critical mass, to Lee's point, and then that volume and liquidity will follow.
I read recently that the chicken and egg problem was actually solved. So I think it's the chicken that came first or something like that. But, so speaking of that, I think the chicken and egg problem is somewhat already solved, in the sense that over the last couple of years, and I'm sure you have better in data than me because you're the experts in this area, but I think the tide has shifted over the last few years, so there's more money raised in the private world rather than on the public world. And in fact, there's a impetus to go towards privatization and away from the public markets too. I was reading about a few months ago one of the research papers that David Weill IV, who is the ex-vice chairman of NASDAQ and the father of the Jobs Act, he authored, and he was pointing out pretty much the same type of phenomenon where people felt it's better to go, private. And, you're now seeing a lot more money being raised in the private world. So I think the mass exists. I mean, the chicken is ready to lay the egg, right? What do you think?
I think the size of that market, that's a different market, right? In regards to what we're talking about, which is retail, accredited investors primarily. That's more large institutions, but it is happening. There is a movement, absolutely. But the deal sizes, for Reg A plus, Reg D, and certainly Reg CF are a lot smaller, right? But again, it's all a very positive trend, and eventually look at crypto, right? Crypto 5 years ago was retail, and I don't think anyone would have imagined, for the most part, anyone would have imagined that it's become what it is today, and with a number of institutions, et cetera. That's how I view this whole digital security market. The issuers that come in early will have the opportunity to benefit, to learn as this market grows, do several issuers, or what you may call a serial issuer, and have the opportunity to take advantage of this market as it grows. But when I said chicken and egg, I don't view it as a problem. This is really for each issuer in and of themselves, right? So, in order to get volume and liquidity, you need to expand your shareholder base. To Lee's point, 100 shareholders, you're not going to see a lot of liquidity. And as you build that, then volume and liquidity will follow.
Yeah, I'd just like to add a little bit to that. I think, there is a lot going on in this space, and it is evolving quite rapidly. But I think the fact that we are providing, the on-ramp was fantastic with Reg A and Reg CF, and allowing, retail investors to actually gain access to these exciting, new companies and investments. Not necessarily even new companies; they were just private for a long time. But before 2012, it was illegal to own these securities as a retail investor or a non-accredited investor. I mean, it's hard to believe, but it was illegal. Like, you could not do it. But so now that we actually have the on-ramp, which is fantastic, right? There was no off-ramp. So, Pat and I's companies are both now, facilitating this kind of yin and yang process. We're the final leg to realize the potential of these private securities, and I think they're just beginning to blossom. Whether you take, I don't know if I want to open up this can of worms around the NFT market or other things that look like securities to me, and they are blockchain native. This is just a whole ecosystem that's colliding right now. And, even the institutional players, and we have a lot of conversations with them, are starting to take notice. There's something happening there that they're, and I think, Pat, you were alluding to this, is that, it's a little bit too small for them. Some of these, issuers, might be just not big enough yet to capture their eye, but they're starting to come around. They're looking at this market for, increased returns on their own assets, because now they're managing money and they're seeking returns, and they're not finding them in these public markets right now. So they're looking elsewhere. And again, there's 23 million private companies in the US alone. And of those 23 million, there's a lot that are amazing, and they don't even want to go public or even have a need to go public. But if you want to access them and add them to your portfolio, here's how you do it. And again, we provide, the on-ramps and the off-ramps, using, leveraging all of our organizations here. So fascinating and exciting.
You had to open up, you had to point to the Pandora's box. So I can't resist but open the lid just a little bit, just to take a little bit of a peek, right? You talked about all the NFTs and stuff happening, but, it seems to me that there's this Cambrian explosion of all kinds of very innovative products and solutions that the market is coming up with, powered by all this digital securities and the blockchains, right? You have NFTs, you've got stable coins, you've got other types of innovations happening all the time, and who knows what else, right? And since both of you admitted to looking a lot younger than you actually are, so I will ask you, have you ever seen this in the other markets, in the other private securities, the public side? I don't think we have, right?
Go ahead, Lee.
I've never seen anything quite like this. I mean, obviously we've all experienced, I wasn't quite born when the internet came around, and that was a thing, but people tell me it was interesting. But no, I mean, it's a little bit like the internet, but I started in electronic trading before electronic trading started, and the buzz around this it echoes a lot of that. A lot of people are very excited. There's a lot of very smart, innovative people that are joining this revolution. But this is that times 10 to me. It's even bigger and more complicated. And what we did back then, whether it was electronic trading using connectivity and fix standards and really engaging electronic markets, that feels quaint right now. Compared to these markets.
Yeah, no, absolutely. I was going to use the same analogy. The internet, when it first came along, and then the progression over a short period of time. But this is multiples of that. I've never seen anything like that. The NFTs are relatively a new phenomenon. I believe it's like about a year now. I think it all started last October, as I recall. And now we're discussing NFTs, fractional NFTs. Are they securities? And again, I have my own views on this. Similar to Lee's, we probably share a lot of the same views. It's unique because there's a new product. There is a lot of noise. There's a question about stable coins. You brought up stable coins, so. Yeah, the president's working group came out with a paper a couple of weeks ago with, a view regarding regulating stable coins, and that's a whole other discussion as to why they're approaching that. But with stable coins, and this can happen from a funding perspective as well, right? You accept in our platform, we can accept stable coin, right? So I'm an investor as well. I'm not only a platform, but I invest in private companies. I've been doing that for since I was 5 years old, 30 years ago. So, but I've been doing it for a long time, and everything had to do with the wire. Then it became an ACH. Well, recently I invested in a company in Amsterdam, and I used stablecoin, and I had an account with one of the token platforms here, and I sent DAI, which is a stablecoin, over to this company, a good amount, and they received it within 3 minutes. Now, when you're sending money overseas, that could take 5 days or longer. So that analogy goes back to the markets that we're talking about, right? More settlement times from days to a day or less than a day, eventually almost instantaneous. There's a lot of there's just so much happening. It's really exciting. And Rialto, Core Connect, and Oasis Pro Markets, we're all positioned for the benefit of this. As it grows, as new products come out, I predict in 7 years, one of the largest market caps in this space probably hasn't even been founded yet. Because if you go back 5-6 years ago, who was FTX? Who were a lot of these companies? We didn't know any of these companies, right? So I think it's just a very exciting time. But for the individual investor, the retail investor, it just means more opportunity, more transparency, which is very important, liquidity, and those are all exciting things as this technology really enables all the markets, not just the public markets, for investors to benefit from.
Yeah, let me double click on something that both of you mentioned. I can't resist that. You both use the word, internet, right? And in the first few years of the frenzy of internet, there were all these really wacky business models that came up. And, people, I was in the middle of that myself, and I would go, who on earth would even dream up something like this? Crazy, right? But I think there was one key thing that many people didn't realize that we now know. The basic infrastructure of the internet existed. It was sound. It was there, right? I think we're at the same nexus point now when many people are debating the viability of stable coins or NFTs, or is this good or is it bad? But I don't think people have realized that the underlying infrastructure and the technology to make secondary markets happen is here. It's alive. It's well. I mean, Pat, you have done examples, and Lee and us, we have done some examples. So it's there right now. So it's not a lack of the infrastructure, right? How do you guys feel about that?
I'll jump in on that. I agree with you. Really, and I don't want to call it there are bottlenecks in our system, and these bottlenecks need to be fixed. And who created the bottlenecks? It's not the technology. The technology has been around for several years to the point where, here, I'll give you guys an example. The technology is there, but you have regulators, right? I don't think we've mentioned yet, we're not only compliance forward, but we're regulatory forward, right? So we're working with overseers to protect the investors at the end of the day. And that's their role. And they are taking a very cautious approach here, which has created bottlenecks. So in a way that's slowed down the progress. But even with that being said, the market is still growing going forward. But I agree with you. The infrastructure is in place, but when I had a question from one of the regulators that maybe Lee got the same question, and maybe you did as well, Karen, which was, how do you know the blockchain is safe? Because the miners control the blockchain, which was very difficult to respond to. But at the end of the day, the miners, there is no coalition of miners, right? So you're dealing with this all peer-to-peer on a global basis. Eventually, the regulators will get there. When you get there, these bottlenecks hopefully will be removed, and then you can really see this market explode.
Yeah, I would add to that. It makes a lot of sense what you're alluding to here, Karan, and I agree wholeheartedly, Pat. When I think of the internet a little bit, and I'm going to go back, a little bit, but when it first showed up, right? I mean, yeah, the plumbing was there. It wasn't robust, but it was accessible, and you had the dial-ups, and not everybody understood it. But there was a training like that had to occur for all of us to get used to getting on and off, the internet and understanding it. I remember the days where, and I still, I don't know, most of my older family members are passed, but They were like, I would never do internet banking. Why would I give up my information on such things? And who can read it? And now I can't remember the last time I went to a bank. So, it's now just a natural progression. And I think, to use, to lean into Pat's analysis where the regulators are like, talking about the blockchain and how do we know it's secure? Well, it's a comfort level. They're just not used to the technology yet. And nor is a lot of people. Like, we're kind of at the tip of the spear here for innovation. And it's going to be a little bit before everybody gets more and more comfortable. But I think we're going to start seeing a lot more chatter about private markets, about digital securities, about primary offerings, about secondary trading, and then you're going to even have cottage industries surrounding those pretty soon. Because the Wall Street Journal and all these Financial Times are going to start picking this up because this will be the story. This is where you get returns. This is where you find interesting companies. This is you just keep saying this and this for a long time. So. There's a lot colliding here, but I do think that there are a lot of analogies to just getting used to the technology, getting we've all, everybody on this call has taken the journey of blockchain, which, I was trained last century. Unfortunately, I had to break a lot of my mindset to get into this space. And once you get there, you go, now it's making sense. And a lot of folks still haven't done it yet. But once they do, it's going to be very, I think it's going to take off pretty quickly, faster than the last internet ride.
Oh, yeah, no, I think so. I mean, it's, the regulatory question isn't going to go away. I mean, that's something that, they will feel uncomfortable. In fact, not just regulators, even the investors will feel uncomfortable, right? A lot of the investors said, how many of them actually know how to set up a MetaMask wallet? Right, that's still a very specialized thing to do for most people. That's it's not accessible at all. But at the end of the day, if you look at it, and this has been one of the themes, not only just of this summit, but when we all have been working together and talking about this, it has to be a very compliance first, safety first type of an approach that we take to architecting these solutions. And I think the more we do that, I think the more the regulators will feel comfortable. And, truth to be told, it's not just about the public blockchains addressing the private markets, but it's also the permission chains as well. So those things have to coexist, isn't it?
I think it's all about investor protection. Really, at the end of the day, when you listen to Gary Gensler, Commissioner Gensler, I admire what he's doing, and I understand the vastness of what he's trying to take on, right? And I think he's the perfect person at the perfect time because he understands it and he understands both. And yes, he is the top cop in the securities regulating market, but there needs to be investor protections. There needs to be an understanding of what's going on at ATSs like Oasis and Rialto, with the registered transfer agents to make sure that, there is some recourse in case something goes down. What is your process? And it's defined. When you deal with some of these other entities, we'll call them, they're not regulated and you don't know what's going on. And even in regulated markets, and Pat, I'm sure you can attest to this, the most regulated folks, and I'm not going to name any names that are, large exchanges have even gotten in hot water for some of their practices. And those are under a microscope. So to even take it away from the microscope and then just live in the wild and just trust me, it'll be fine, is probably not a good growth strategy.
Right. Yeah, I absolutely agree. And look, I think our infrastructure is in place, and I think, Rialto, all the other ATSs, and Core Connects, which provides a secure, auditable platform. We're all compliance and regulatory forward. It's, these other groups, and this, again, this is part of what the regulators are doing, right? Is they're creating bottlenecks for the regulated entities, which is us, and we're working through it, right, in conjunction with them. And they're examining these other spaces. So regulation by enforcement is happening, and the predictions are you'll see more and more actions taken against companies doing exactly what Lee just described. Probably in the short term, it could be the long term. And by the way, my heart is I've been in this crypto blockchain space now. You could say since 2014 because I opened a Coinbase account in 2014. But the truth is, I didn't do any trading. And the only reason I know I opened it in 2014 was in 2018, I went to open a Coinbase account. And they told me I'd already opened one. But I've been in the space for 4 years or thereabouts. And I'm really excited about the DeFi, the anonymity, the opportunities. But there is a lot of noise, and the investor protections that Lee had mentioned earlier, and that all of today has been about, in a way, in regards to the summit, is first and foremost what needs to get done, because it's a matter of trust.
Exactly.
It's a matter of credibility, and once that trust and credibility bridge is built, then we'll see the growth. But we're building we're building the infrastructure. We're the foundations today. It's a little early, but and those that are watching, they're going to benefit from all this with quality issuances and all those items that we mentioned before regarding transparency, faster settlement, liquidity. All the benefits that institutions have. But most other investors don't.
That whole aspect of trust. I mean, that is the most critical thing, right? I mean, that's the reason why we all talk about it. We have spoken at other summits, and Lee and us and Pat, and every time we always talk about the digital infrastructure of trust. I mean, that's what it really is. I mean, it's at the end of the day, the safety for both investors and the issuers, and then making sure that the regulators are comfortable with how these things are performed. I think that really goes a long way towards adoption, but it's just continual education, isn't it? I mean, we've got to keep educating people about, what are these, elements of trust that make this a viable system.
Absolutely. And then a tipping point, right?
A tipping point, yes.
Yeah. Once that tipping point happens, again, I think in 10 years, we'll look back, and I know that all of us will be saying this, but others who are skeptics today will look back and say, why didn't it happen sooner? Right. Why did it take so long? Because that's reality. That tech is tech, and this blockchain is just if you can dive into it and all these benefits. It just, for the capital market space, it just makes a whole heck of a lot of sense.
Well, Lee had this little spear. We're sitting on the tip of the spear. Well, that's an uncomfortable place to sit, right? But you know what? That is a tipping point.
Nice, Lee. Nice. I came in just in time. And, it's an interesting comment you make, Pat, that we'll look back 10 years. Well, I have the pleasure of looking back 12 years. And you're right. The naysayers 12 years ago was when the Jobs Act was first introduced. Oh, it's going to be full of fraud, full of this, full of that. Knock on wood. It showed the world that it wasn't. In fact, because of the Jobs Act, people like David Wield, Sherwood Neese, Douglas Elinoff, Sarah Hanks, traveling the world because other countries embraced the regulations. They saw the fruit. And they saw, wow, this could be, and yes, all over the world, we started seeing it. So, and now we've hit a major milestone in one of the regulation. It's major because it lived up to its promise. And then, if you're a FINRA broker-dealer, I'm going to share this with you. FINRA broker-dealers, when Regulation CF came, oh, come on, I don't want to be bothered with that. It's $1 million. And now they're seeing statistics. Data. So one of the platforms put a statistic on the top 3 platforms. These top 3 platforms did about, 90% of all the capital raises. And it had one chart had one at 450 million, the other one at 375 million. And, the comment to me was, Oscar, is that a joke? Is that like projection? No, I said, that's what they've done. but I mean, they did that over 20 years. No, they did that over 3-4 years. And, but they're only getting 1 or 2%. No, they're getting 8 to 10%. They made more money than some of the broker dealers who have been saying, oh, it's nothing. The world has changed. COVID-19 became the greatest thing that gift. And I know it sounds sad to say this, and I apologize. I'm not trying to be, but it created this environment where everybody's engaging online. Look how we're doing events now. We're doing it fully online. And look what we're doing. We started doing them via Zoom. We recognized we needed to improve the engagement. And this is the new world. This is, if we ever do get to a physical component of it, there will always be a portion of people that we still need to provide this information online, and it needs to be continual. And it's just getting started. And that's the beauty of it. It's going to take all of us working together to do it compliantly, with obviously the following the guidance of the regulators and making sure that we're on side with that. Pat, Lee, Karan, thank you so much for a great session, enlightening everyone. As I said, every one of our summits, we keep opening a new chapter. This chapter opened up in June of 2021 with the launch of the first ever end-to-end, in the market, allowing everyday people to trade $5. I mean, and we're going to see more when Pat launches his, and there'll be others, and that's okay. People need to understand there is, just in the United States alone, there's 32 million privately held companies. There's room for everyone. Well, we all need to understand we need to work together. That's the harmony that we try to do here. That's why it's so enjoyable. So what happens now, this event management platform provides a really unique way for us to close off, which everyone is going to be put into the lounge. Pat is going to be there. We made it. Thank you, everyone, for letting us know. We had too many tables. Thank you. As I said, it was going to be bumpy, this first one. That was number one. And there's only going to be 3 tables, so you can go in there and start communicate. All you got to do is click the join, and they'll be there. You can turn on your cameras. You can speak to them, have questions, and of course, their names are at KoreSummit and KoreSummit.io. You can see their bios, their LinkedIn, their email address. We want you to be able to communicate with them as you need. And until the next KoreSummit, which is on December the 2nd, 2021, Dare to Dream. It's going to be an exciting one. The keynote speaker is going to be announced soon. This is going to kick off our year for 2022 for all these great companies that are here to democratize capital for everyone. Until the next event, I want to thank everyone. Thank you so much for taking the time out of your day to get this great education to help you in your journey of capital raising using the new digital frontier, as we say. So until next time, have a great time. Go to the lounge, enjoy your time speaking to the speakers, and we will be seeing you very shortly. Thank you, gentlemen.
Thank you.
Thank you again.
Thank you.